Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
The U.S. dollar index experienced a slight decline yesterday, settling at the 104.15 level. As the Federal Reserve adjusts its cautious stance based on the latest data, the mild market fluctuations in the dollar continue to stir interest. The hot labor market data released last week may prove that delaying the easing cycle is reasonable, and Fed officials are calling for patience. The stabilization of the dollar index last week was almost entirely due to the strong performance of the U.S. labor market in March. The labor market not only remains healthy and tight but also poured cold water on the expectations of many investors for the Fed to cut rates at its June 12 meeting. Gold prices retraced after reaching a new all-time high above $2,354 at the week's opening, falling back to the area around $2,335. The 10-year U.S. Treasury yield remaining above 4.4% has limited the upside for gold prices. After hitting a new record high of $2,330.50 on Friday, gold prices fell to around $2,303 per ounce before making a V-shaped rebound to $2,254. The challenge for gold prices is primarily due to the rise in U.S. Treasury yields, which weakens the appeal of non-yielding assets. The recent rise in the dollar has put downward pressure on gold prices, as the cost for investors holding other currencies to purchase gold becomes higher, leading to reduced demand. WTI crude oil prices opened the new week with a bearish gap and further retreated from the 5-month high reached on Friday. However, the commodity made up some of its losses during the Asian session, now trading around $85.80, marking the second consecutive day of declines from the 5-month high reached last Friday. Nonetheless, WTI oil prices narrowed the losses of the Asian session. The withdrawal of more Israeli soldiers from southern Gaza and the promise of new negotiations for a possible ceasefire with Hamas eased investors' concerns about the escalation of conflict in the Middle East and the risk of crude oil supply disruptions.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment. Remember to join us tomorrow